Hello everyone. Today we're going to talk about a company that probably everyone on the planet knows, at least anyone who has access to information and the internet. It's not the leader in terms of market capitalization, but it is the leader in brand recognition, Elon Musk's company, Tesla. Today's review will be quite detailed, in-depth, and believe me, very interesting, with some rather unconventional conclusions. But let's not get ahead of ourselves, let's dive right in. Let's start by looking at the chart. These are weekly candles. I've done some preliminary marking here, and we'll begin our analysis from a distance. You can see the big picture only from afar, so we need to analyze the history in order to properly understand what's happening now. Pay attention to this area I've marked from February 2020 to December, or January 2021. In simple terms, if we look at it, we have one high, a second high, a third high, but the RSI highs are consistently decreasing. This is a weekly scale divergence, which should have resulted in a deep correction. There was a correction, in fact, but it wasn't very deep, at least visually. By the way, I want to point out that I always use this for analysis, a logarithmic chart. That is, here, you right-click and select the logarithmic price scale. Not a nonlinear one, not any other. Specifically, the logarithmic scale. I won't go into detail about why right now, but it's the correct way. So, pay attention to the following point. Here was a wave of growth. Let's mark it, highlight it somehow. Here it started, and then it kept going and going. And what then? Here we should notice that the RSI on the weekly time frame rose above 90. It reached 93.58. At its peak, this indicated that the stock was extremely overheated, and with RSI values at 90, buying is strictly prohibited. And after that, there was a deep correction, and the depth of this correction, but I'll delete this line for now, just so the percentages are clearly visible. Even not from the absolute maximum, it amounted to about 63.5%. So yes, after that, the price did go up. You can't say that if you didn't sell the stock and kept holding it, you lost something. But you could have bought it 63% cheaper, even if you had waited for just half of the correction. So ideally, look, when could you have bought? A correction, the first bullish engulfing pattern on the weekly time frame, when the green candle engulfed the red one. And that's where you buy. Let's see how much better it would have been if you had exited the market during extreme overbought conditions. You would have bought the stock 43% cheaper than you sold it. That's how it works. Now pay attention. After a deep correction, the price continues to rise rapidly and very strongly. We should be seeing a divergence here. But there's one nuance. The RSI entered the 50 value area, and after it enters this area, we have to state that now we can't consider divergence between such peaks. Because in fact, the unloading or correction has already happened. It can happen down to the 50 level, it can happen down to the 30 area, but it has happened. What do we see next? So, in fact, this is not a divergence. We shouldn't consider this section as a divergence. What happens next? We get a flat correction. It can be placed in a rectangle like this. Well, maybe it's not exactly a rectangle. That's how it turned out for me, but it's a flat correction. So we don't see any kind of sharp or even noticeable drop here. It's a flat correction, and then the next wave of growth. And now pay attention. We get consecutively lower RSI peaks without entering the 50 value area, while the stock price highs are rising. And here we have a full-fledged divergence, which ends with a correction. And this is not a small correction, even though on the screen it doesn't look very big. If we measure from the maximum to the minimum, that's about a 40% drop. So that's a huge drop, 40%. So if the stock was worth at its peak values when the divergence formed, about $290 to $300, it dropped down to around $180. So almost by half, almost. We figured out how to work with divergences, how and what happened. After that, notice that the growth continued, but again with a dip into the RSI 50 area. So in fact, it's somewhere here that we should say the correction took place. That doesn't mean there can't be a further drop, but still. We've just taken note of this for ourselves. Consider this an instructional video. Now for a moment, let's see what's happening right now. Here we have one high and a higher one. Now we'll take the markup. Here's one high. This high corresponds to this RSI peak. Here's almost the same one, but the RSI is clearly lower. You could say this is a divergence. But no, this isn't a divergence because the RSI dipped into this area below the value of 50. So, there's no divergence here. Now let's remove this markup and take a closer look. Look, right now we're only talking about divergence. What do we see? We can see that here's one price high and the second one didn't surpass it. And here, it's a similar situation. So, there's no divergence here either. What else do we see? Let's remove all the markings entirely. We can see that this current week of growth is at risk of closing higher than anything before it. What does this tell us? It tells us that the growth is continuing and there is absolutely not a single reason to open a short position. That's what we've come to. So right here and now, at this moment, yes, the market looks overbought. There's a hint of overbought conditions, but there isn't a single reason to go short. Now let's bring back our markings and return to the price levels. Look, here's the key point. A level from which there was a very significant drop. That is from the level of about $410,000. White. We dropped down to the $100 range. So a fourfold drop. A huge decline. Accordingly, this level is extremely important. Look, we temporarily went above it. And then there was another deep correction down to $200. And we fell from $485. Accordingly, right now this level, I'm talking about this white one, has been breached. And if we see the price close below $407 on the weekly time frame, then with high probability we can expect a decline at least to the $350 range. I'm not going to make any global forecasts. I'm just telling you about technical analysis. It will get much more interesting at the end, believe me. I stand by my words. Next, here we have the second peak, which is very important. We take the body of the candle with the highest close. The red candle doesn't suit us. Why? Because its opening is higher, but its close is lower. So this is the $436 level. Notice how we traded around it for a long time, sometimes above, sometimes below. Right now we've broken through it. In fact, well, I don't know how this week will close. But as long as we're above the $436.19 level, there can be no talk of shorts. So for now it's a long, but whether you should buy into this long is a very big question. And we'll answer that at the end of the video. But it's definitely not a short here. Absolutely certain. You can start considering shorts only when there's a bearish engulfing pattern, meaning when a red candle engulfs a green one, and not just any green candle, but one that has updated some of the local highs. If such a red candle closes below the $436 level, or even better, below $407, that's it. We're completely done with the weekly candles, and we can state that the situation here is one of continued growth, a long position. There isn't a single reason to sell. But is it worth buying? With RSI values like these? I'm not sure. But you should buy on corrections. Do you see such a deep correction? Do you see a bullish engulfing after this correction? Then yes, it makes sense to buy. Now we're moving on, removing all the markings. Maybe we'll even delete them right now. And we're switching to the monthly candles. This is the largest time frame. Let's go ahead and delete everything. We'll always work from a clean slate. And let's look at the monthly candles to see what we have here. Notice that from the 50 value area, we're moving somewhere upward. This in itself means that talking about any divergences isn't really appropriate. That's one. Secondly, last month we had the highest monthly candle close ever, which supports the case for continued growth. And at the very least, an update of the high that was set in December 2024. Why? Because we closed above December, but at the same time the high wasn't updated. And this September close suggests that the previous high, which came before this highest monthly candle close, will be updated. So here too, it's a long. There isn't a single reason pointing to a short. We would need to see a bearish engulfing here. We don't have any extreme overbought conditions on the monthly candles. So the monthly candles indicate that this is a long that is continuing. Should you buy? We'll talk about that at the end of the video. Daily candles. What do we have on the daily time frame? Honestly, I don't know myself. We're doing all of this from scratch. I only prepared the weekly candles for you. Pay attention to the daily candles. We also went into the 50 value area, which means that a full-fledged divergence, we do not have the right to consider it. We need to pay attention to the fact that this red bearish candle, which updated some multi-day local lows, was absorbed, at least by this bullish candle from October 23rd. This indicates that a bullish reversal occurred here. And this means that with high probability we will update this, either local or historical, maximum from October 2nd. And here as well, there is not a single reason to take a position. I emphasize, not a single reason to go short. At the same time, this small green candle is a very important key level for us. Now we'll turn on magnet, but it's important because this was the highest historical candle close on the daily time frame. And that's $479.85 with a very high probability. This is our target level, and most likely we will reach it. And still, the question remains, is it worth buying? Let's wait. Now let's take a look. I don't want to switch to the 4-hour or any local time frames. Although probably, even though I don't want to, we will switch and see what's here. There's also no indication here that this is a short. The situation here, let's say, is not very expressive, but you can't call it a short setup. There are no bearish engulfing patterns here. If we open the analytics for Tesla stock and look at its basic economic parameters from an investor's perspective, we will see the following value. The PE ratio. This is a ratio that shows the relationship between the stock price and the company's earnings, its profit. For Tesla, it is 312. At the same time, the norm is considered to be, for any company, this value is 10 to 12, and for fast-growing IT companies. The norm. Well, the generally acceptable norm is typically around 30. 312 is considered to be an extremely high value, which means that it's actually about 10 times higher than what is usually expected. Well, the generally accepted permissible values, even for fast-growing IT companies, are much lower. This means that either, well, let's look at Tesla as if we don't know it's Tesla just by looking at the numbers. And this means that either the company is unprofitable or it has minimal profit. And the price of this stock is extremely inflated, or the market is factoring in fantastic growth expectations for this company. So usually such a PE ratio corresponds to a highly overvalued stock price. Well, let's think about it, shall we? Well, the company seems to have a profit, but can we really expect extraordinary growth from this company? Especially in the electric vehicle sector. Of course, Tesla is not limited to electric vehicles. It has the Starlink space internet for connectivity, solar panels, and much more. But still, can we really expect in our right mind some kind of fantastic growth? Hardly. So this rather suggests that the company is very much overvalued. The next ratio is return on assets. It stands at 4.9%. The norm is considered to be 5 to 10%. That's a healthy level for any company. Accordingly, 4.9% is at the lower end of the norm. We can't say that this is a bad state for the company, but it is at the lower boundary of the generally accepted norm. The company is not using its assets very efficiently. The next indicator is return on equity. It is 8.2%. The norm for stable companies is 10 to 20%. 8.2% is a below average figure, and it means that shareholders are receiving a relatively modest return on invested capital. And finally, the last indicator is gross margin at 17.5%. The norm for this indicator, of course, depends on the industry because efficiency varies across different sectors. For retail and industrial companies, it's 10 to 20%. For the IT and pharmaceutical sectors, it's 40 to 70%. 17.5% for Tesla is an average level typical for mass market industries. Retail, manufacturing, overall, this indicates that Tesla is within standard values. Final assessment. Tesla's PE ratio is extremely inflated. The shares appear to be highly overvalued. The efficiency of its capital and assets is average. Profit margins are average. The company does not have a unique profit advantage. This suggests that the business's performance is mediocre. But the shares are priced like those of a superstar. This is either a bubble, or the market is expecting a sharp increase in profits in the future accordingly. Which of these conclusions or expectations to choose is entirely up to you. I won't share my personal opinion, but I can say for sure that now is definitely not the time to buy. I've shown you that you should buy during corrections when you see a deep correction. They've already happened more than once by 60 and even 40%, and I think we'll see an even deeper one. And when, against the backdrop of a correction, we would get a bullish engulfing pattern on some large time frame, weekly, monthly. So when you see something like that, that's when you should consider buying, not before that moment. If you enjoy this kind of content, subscribe to the channel and leave your comments. What do you think about Tesla? Maybe you want reviews on some other companies. And I'll keep making them. Keep doing stock market analysis. On cryptocurrencies and commodity instruments as well. I might return to the Forex market, but that will be a little later. For now, it's just in the plans. Goodbye.